2014.
Yeah, go ahead.
And from this point, and so I was brought in by Anthony Diorio, and that business still exists today. I still work for his company, Decentral, and I ended up working for the Ethereum team. And there's a picture of me with slightly more hair on the 2014 Ethereum website. And then working for Ethereum led me to work for many other people in the crypto space, some of whom I'm going to tell you about today in the course of this talk.
Thanks very much for that. I think you have some connection with the greatest country, and that's my way, Ghana. So can you tell us how you're connected with Ghana?
I do. Um, one of my first jobs in university was working for a Ottawa environmental group that my father had worked for many years. My family is very involved in the environmental community here in Canada. So I went to Ottawa, worked for them one summer, and since I was studying biology and chemistry in undergrad, it only made sense that when they needed somebody to send to Ghana to work at their equivalent organization in Ghana, because in each country there was the same organization, there was like 100 of them, and they needed somebody to go and investigate, does it make sense for us to partner up with our Ghanaian colleagues and do this joint project together? So they sent me, the summer student, to go. Everyone else was busy, and I spent a summer working at Friends of the Earth Ghana in East Legon in 2006, I think, which was very neat because at the time there was a big industry of people coming from Canada and States to go do nonsense NGO jobs that didn't do anything. But I actually got to work with the real Ghanaian people as opposed to these kind of fake NGO projects that maybe I shouldn't say that on this call, but I'm sure everyone's familiar with this industry of bringing over foreign people who do nothing. So I got to work with the Ghanaian people, and they gave me some tours of some of their project sites as well over there. And it was an amazing experience to get to work with actual people on the ground, see some of the stuff they're doing. And ultimately, there was no joint project. It didn't make sense for either office to set up this project together. But I got out of it a really interesting experience of seeing Ghana before some of the big economic boom that's happened in recent years. And it's never as much of a boom as people would like, but I understand things are going better for a lot of people than they were back then. And here we are, amazingly, 18 years later, talking future technology. So I think it's kind of neat to come sort of full circle on this from when I was a summer student as a university student, and then to see a much richer country years later that's now looking at what to do on joining the future with technological regulation.
Okay, so thanks very much for that. So without much ado, I want to leave the floor to your good self. I guess you have a presentation that will take us to 30 to 45 minutes. Thereafter, we'll have a lot of questions that participants have sent in. Then we can start the discussion. So over to you.
All right, and happy to answer any questions, and we can stay as long as people like. My normal job is being a corporate commercial lawyer, and I do regulatory work. I've provided answers to many government consultations that have gone on over the last many years. And I've been involved in the stories I'm going to tell you because I was either a lawyer for them, know the people who were doing it. In some cases, I observed the court hearings themselves. And over the course of today, I'm going to tell you about 4 different stories about businesses that have impact on how regulators have viewed this space, the problems, the opportunities. And then I'm going to make this a little bit more technical and talk about the 3 big issues in Canada that these stories are related to. And then we're going to move over and talk about the structure of Canada's money industry, because there's many differences from how Ghana is organized. And in terms of what lessons can be learned for regulations, these things are so specific to the particular country's structure that I can only tell you a little bit about how some of these things have gone in Canada. And then in the discussion, we can talk about whether some of these things might be applicable, what things can Ghana do better than Canada at, because I don't think Canada has done the theoretical best, but it has been quite a leader in creating regulations in this area and has had a number of successes of its companies. And my stories are going to talk about one failure, a bad story, and then three good stories. And of course, the bad stories are the ones that regulators pay the most attention to rather than the good success stories. I'm sure some of the people on the call can sympathize with that. Unfortunately, that's the way it is, that the government views things largely in terms of problems rather than opportunities. But I think for this talk, it's important to also talk about the opportunities, because proper regulation of a sector can also actually create opportunities. Although often it can be negative for businesses, many businesses support these things. The laws that have happened in Canada have had huge support from the businesses in Canada, which might be surprising to some people. But when I tell you about what these laws are, I think you'll better understand why people have been keen on them. But talking about this business stories first will help you to see that, because these businesses emerged at a time when there weren't any rules. So the overall arc of rules in Canada is that it started off with anti-money laundering rules, and then it moved over into securities rules, and now it's moving into a third phase of regulations in a number of different areas in the payment space. So first, the bad story. Quadriga CX. If some of you are familiar with Canada's landscape, this name might mean something. To the rest of the world, it means nothing. It was a Canadian business that was a buyer and seller of Bitcoin and Ether that was quite successful for a while and was very popular, but then unfortunately turned out to be fraud. So not only was it run by white collar criminals who were one of the persons was involved in identity theft before, other crimes, and then they got into this business of buying and selling Bitcoin and Ether. And although they really did buy and sell these things, it morphed into being something much more like a Ponzi scheme. And with the sudden death of one of the founders, suddenly the whole scheme collapsed and more than $100 million was lost, because it turns out that the Bitcoin and Ether that they said was in the accounts wasn't, and they'd also stolen lots of the money as well. And Quadriga CX was a really defining moment for regulators, because securities regulators got definitely an earful, I'm sure, from some government officials, public policing services, because a business like Quadriga CX is not at all like a normal criminal enterprise. And where exactly the boundaries were in the business between crime and real business, it's very unclear. Ernst & Young was appointed to look through the aftermath of this. But in short, it was terribly run, and it was a fraudulent service that cost people huge amounts of money. And that moment led to securities regulators taking over this space and saying, well, we don't want people doing that anymore. We're going to make it so businesses that operate like Quadriga CX now have to become what are called restricted dealers, regulated by securities regulators. And I'll tell you a bit more about that system later of restricted dealer. But this has come about in the last few years and is the main system now for companies that buy and sell with the public. The next story would be one that piques your interest if you've been following US developments around exchange-traded funds. And for those of you who don't work in the investment industry, an exchange-traded fund is just a very type of very low-cost mutual fund that is publicly traded rather than being sold just through securities dealers. So this is something you could buy and sell on a stock market. And it's very common in Canada for people to have online brokerage accounts so that they can directly buy and sell stocks. So you can easily buy and sell Bitcoin or Ether in the form of these securitized pools called ETFs. And before getting to an ETF, the initial phase is to make what's called an NRIF. It's just a type of mutual fund in Canada. That was a slightly easier regulatory sell for the company that put this forward when they wanted to make the first Bitcoin fund in Canada and one of the first in the world. And this was given the unimaginative title of Bitcoin Fund. And it was put forward by a company called 3iQ that's played a pretty key role in Canada. And what 3iQ did is they put forward a proposal where they would store all this Bitcoin with a very large custodian, not them. That's a key part of the system. And they would get this approval, and then they would trade on the Toronto Stock Exchange under this ticker. And then everyone can buy and sell Bitcoin, not as actual Bitcoin, but as trust units of this giant pool that's properly secured. And this is the model that started up 5 or 6 years ago in Canada with 3iQ's Bitcoin Fund. And the Ontario Securities Commission, who oversees the vast majority of securities work in Canada, because something like 3/4 of Canada's investment activities have to do with Ontario, which is where Toronto, the major city of Canada, is located and the home of the financial industry. So the Ontario Securities Commission is very important. They looked at this and they said, this is too risky. We don't think you should be able to have a Bitcoin fund. And they had a whole bunch of objections to this. And I think we might have some people who work for regulators on this call. But unsurprisingly, they're very focused on risk and loss. They said a number of things like these markets are unregulated, Bitcoin's too volatile. There'll be arguments that are familiar to everyone who's familiar with Bitcoin, who's here. They had a laundry list of these things. And 3iQ didn't just say, well, okay, I guess we won't do it. Instead, they went back and they appealed it, and they actually won on appeal. And these appeal hearings were quite well attended by people who work in this industry because it was fascinating to see this showdown between some great litigators that they had working on this up against the Securities Commission, which put forward tons of lawyers. They were really fighting this one, but they lost. And then the 3iQ Bitcoin Fund was allowed to launch, and then competitors launched as well. And today there's billions and billions of dollars of these exchange traded funds that exist in Canada. They're not particularly controversial. There's been hardly any news about them since they launched. And then in America, they just approved these as well. And they had many of the same objections at the federal level with the SEC in the US about these exchange traded funds. But I thought it was kind of funny watching the American example because this conversation already happened in Canada years ago. These things launched, they're overseen by securities regulators, and there weren't any problems with it. Ultimately, the government's concerns ended up being not real concerns. And on appeal, the commissioner saw that, they agreed with it, and it was a good decision because these ETFs have been a great product for Canadians because now they don't have to worry about how to store Bitcoin or think about private keys or any of this stuff. They can just buy them with a normal brokerage account. Which is a part of the story of regulation here, about integration of these things into this larger money industry of Canada. My third story for you is about the QCAD stablecoin. And this one's less of a big financial success story, but it's one that I think is an important regulatory story, and it's one that's still playing out. And what this one was is that 3iQ again, and a software development company here in Toronto called MavenNet, they saw that there were stable coins launching in other countries, which for those of you not familiar with stablecoins are, they are tokens that could be on the Ethereum network, for example, and each token is worth $1, typically US, but there's also Euro stable coins and various other currencies. And what they do is somebody sets up a company or trust and they sell these units to the public. And for every unit they sell, they put $1 into a bank account or similar instruments so that there's money that's backing each of those trust units. And exactly how these are set up depends on the country and the particular laws. But the idea is that what you want to get to is the place where you have a stablecoin unit in the form of a token that can trade hands. And now you have digital dollars on blockchains, and these things have been exceedingly popular. USDC is probably the best example of this, of an American one that's overseen by a limited trust company in New York. But 3iQ and MavenNet decided to make QCAD, a Canadian version of this. I was the main lawyer for that project and created and launched this stablecoin which hasn't been a big financial success because a part of these systems is you can actually go and see how many dollars they have at any given point, and you can see how that changes over time. And there aren't a huge amount of dollars in this. But over the last couple of years, it's become a big focus of securities regulators, where they've written about uh, 3 different staff notices, I believe, that have covered stablecoins. And they're becoming a bigger and bigger issue as people think about what the future of money is. So although the QCAD stablecoin hasn't been a big financial success story, I think it's an interesting regulatory story and one that's still developing. And then my last story before we get into some of the more complicated law points is about ShakePay, a client of mine that's a very popular, easy Bitcoin Ether dealer. They're based in Montreal, great team of people. And they started their business before the restricted dealer system. And then they're one of the dozen or so companies that have been able to get these restricted dealer registrations with the securities dealers or securities regulators. So ShakePay is a company that's gone from unregulated status essentially into money services business into restricted dealer. And I'll tell you a little bit more about what a money services business is later. But ShakePay is a great success story. They've had more than 1% of the Canadian population, I believe, as their users. Very, very popular because they offer a simple service and they navigated that restricted dealer process successfully. Okay. These stories that I've been telling, how do these relate to the big issues in Canada? What are those big issues? 1, trustworthy markets. 2, investment funds. 3, banking. And I say trustworthy markets because that's what a lot of people are interested in from a regulatory perspective, but also from a consumer perspective. Buying and selling from, I don't know, some guy you meet on the street, um, there's downsides to doing that. You might get robbed. There might be some other problem with doing that. It's just shady. And actually, when I started off in crypto, those days were just ending. There used to really be people who would meet at cafes and they would set up in the corner of a cafe with like a duffel bag of money and you can buy and sell Bitcoin with them. Show up with your $100, they'll sell you some Bitcoin because there weren't really stores for doing this. There actually are storefronts now in Toronto where you can buy Bitcoin over the counter, but there weren't online dealers that were particularly popular. If you wanted to buy and sell Bitcoin, one of your main places to go was a sketchy company set up in Japan where you'd wire your money internationally to them. And I have many friends who lost money on that one. That one also ended in failure. And this was an industry that was really kind of shady, difficult access. One of my clients set up the second automated machine in Canada for buying and selling Bitcoin at the start of 2014. So you could go into their store and you could go and you could feed money into the machine, which stops the people operating the machine from getting ripped off by counterfeit money because the intake detects them. And you could select how much Bitcoin you want to buy, and then it'll send it to your address that you scan on your wallet. And these were quite popular for a while. But then the government became concerned about this industry. What exactly their concerns were are a bit unclear because the way they decided to go about the first law in Canada, and actually one of the first laws in the world that started in 2014, was to reform the anti-money laundering system to include what became known as virtual currency dealing within that system. And the anti-money laundering system, although it's generally applicable to banks and many, many other kinds of regulated players, the particular focus back then was in a kind of business called a money services business. And you might be familiar with these kinds of businesses as being those storefronts where you can, buy and sell American dollars or other foreign currencies. That's probably money services business, the Canadian equivalent of that. Western Union, these kinds of international franchises, these are also set up as money services businesses in Canada. And money services businesses do a wide variety of things in Canada, but they're a niche sort of service because almost everyone is served by what are called the Big Five banks in Canada, where more than 90% of banking is by those 5 banks. And so the MSBs end up being scrappy, tiny outfits. Almost all of them are family-run businesses. Many of them are actually intertwined with some other business, like out of a convenience store or something like that. And they provide niche financial services like remittances for foreign workers who are sending money back home, money exchange between different currencies, unusual types of payment transfer systems within Canada, and a variety of other related services. And these money services businesses, the government expanded that to make virtual currency dealers as a category. And the way that works is you register with the federal agency that oversees this, and then you have to file a number of reports, and you have to have a very long compliance manual about all of your policies, basically how you're going to stop criminals from accessing your services. So this was the first round of rules in Canada. And it wasn't so much focused on trustworthy buying and selling, so much as trying to eliminate criminals from accessing these services, as well as financial surveillance. Because one of the purposes of the anti-money laundering system in Canada is that it's also a financial surveillance system that feeds information into the police, spy service, and other agencies in Canada. So the first thing was to tie that in. And then the anti-money laundering system was set up. And then for the next 4 years or so, that was your main set of rules to think about in Canada. Is this activity virtual currency dealing? And those rules expanded over time, but they were still very much focused on the anti-money laundering side. And they didn't have much of an impact on who could buy or sell, because the anti-money laundering system in Canada for MSBs is actually an extremely low level of regulation. You don't even have to show your ID to start a money services business, which I've always thought was sort of ironic, that you can just register these over the internet and the government doesn't check anything for you to become the person who checks other people's IDs and make sure they're accessing the system properly. It's not a tough bar. The actual cost of setting up these kinds of programs, for maybe $10,000, you could start one of these businesses. You hire a compliance expert, maybe a lawyer to help you do some of this, and then you get going. It's not a high level of paperwork. And last time I checked in Canada, there were more than 1,500 companies registered to do these sorts of activities. And they have a pretty wide range of what they do. But still, the trustworthy markets problem, not solved. Quadriga CX was the disaster that happened that really caused a reevaluation on the trustworthy market side that took a little while to get to, but then led to a restricted dealer system where the government told everyone, if you have a business where the way it works is that customers create an account, they send you money, and then you can buy Bitcoin, and then that Bitcoin can stay in the account. It's not automatically delivered into the customer's crypto wallet. They said that business is riskier than businesses that deliver immediately to the wallet, because these companies don't work like that ATM example I told you. They don't work by you going to a machine, put in the money, get your crypto, because that business is less risky than one where you have an account, because with accounts, it's possible for them to defraud you, like it happened with Quadriga CX, where hundreds of thousands of accounts, but then it turns out those accounts weren't backed the way they appeared. So you see 3 Bitcoin in your account, but actually they robbed you of your 3 Bitcoin, and you can't know that. So the securities regulator said, we think actually, because there's no immediate delivery, that's a security, that the companies have created a security by not delivering immediately. That delay in delivery is a type of securities contract. And that's their basis for asserting jurisdiction over regulating the space, even though there was no statutory reform. So on the anti-money laundering side, the federal government actually brought in new laws that changed the law. The main law in Canada is called the PCML-TFA, Proceeds of Crime, Money Laundering, and Terrorist Financing Act. They actually changed that law back in 2014. But on the securities side, securities laws have not been changed. In Ontario, they submitted a reform bill from the Ministry of Finance, I think about 3 years ago. The bill never went anywhere. So instead, they said actually no laws are required because we think these things are already securities because of this immediate delivery issue. And so they've asserted jurisdiction over everyone with that model, and not the models where it's cash over the counter, deliver Bitcoin. Those businesses are still outside of this, but all of the account-based services are not outside of it. And these have become known as restricted dealers. And there's a very, very long application process and a very detailed set of questions you have to answer from the government and financial requirements and tons of other rules. And about a dozen companies have managed through that gauntlet. And this is the government's solution at the provincial level to how to make trustworthy markets in Canada. Because the restricted dealers are subject to tons of rules, like storing a certain percentage of the cryptocurrency with a third-party custodian, having a certain amount of money, having certain processes in place, and being actually supervised by the provincial securities regulators, which was a big change in Canada. And although everyone can find things to criticize about any regulatory system, this one's been quite popular in Canada. And I've been steering people for the last few years. If you want to buy or sell Bitcoin or Ether, your best bet is to use one of these restricted dealers. There's not very many, they're quite good brand names. None of them have collapsed during the system's time that it's been online. It's been quite a good success story of bringing a level of trust that certainly didn't exist with the Quadriga CX failure. The other big story is investment. And although today's talk is a little bit more focused on banking, I believe, and that's the thing that's interest for Ghana, things. I'm sorry, if I can ask you, Queen, muting your mic, hearing you. Perfect. Thank you very much. So, investment funds. There's the other big story. And this is a story that hasn't received, I think, enough credit in Canada for creating these ETFs that became the largest market in the world for ETFs. And billions of dollars are sitting in these funds right now. And I think they're related to the trustworthy market story. And there's something that solved a major problem for Canadians, which is how do you get involved in the speculation side of this? Which, although that's not the only side and it's not the main part of my work, it's obviously a major part of this. That a huge number of people want to speculate on the price of Bitcoin and the price of Ether. They're not so concerned with holding these things. They don't want to personally use cryptocurrency for doing transactions. They don't really want to be doing DeFi or any of these other interesting things. Their sole interest is, I want to bet on the price of Bitcoin going up or the price of Ether going up. And investment funds answer that question perfectly, and they do something else. By securitizing the cryptocurrency and making it easy for you to buy and sell these things as securities, you can put them into registered accounts. So in Canada, there's two major kinds of what are called registered accounts. One is a type of savings account called a TFSA, and the second one is a retirement account called RRSP. And both of these things are highly tax sheltered investments. And for most people in Canada, these are a key financial planning tool because the tax rate in Canada is very, very high. So the opportunity to not pay any tax on these tax accounts is very important to people. And you can get your Bitcoin or Ether in the form of security and put it into these accounts. And if you're a regular person in Canada, many people have not maxed out these accounts. So if you're using your TFSA, you can put this into the TFSA and pay no tax on the gain in the cryptocurrency, which is a big deal for a lot of people. So actually, by creating a securitized version of cryptocurrency, it's opened up a new avenue for people in terms of tax planning by being able to take advantage of these investment accounts that are for securities that are tax advantaged. So I think investment funds is another really big story about the regulation of this space because it's opened up this tax side. But it's also just a big deal to have access to this because now people don't have to worry about the risk of losing their cryptocurrency. And it makes it much simpler for those people who just want to do that part and not have to worry about the actual thing itself. The 3IQ Bitcoin Fund is a great example, but if you look in Canada, there's a number of other major investment funds, investment fund managers that have set up these Bitcoin and Ether ETFs. And now in the United States, you're seeing exactly that Canadian industry go across the border and make an ETF industry in the United States, and already billions of dollars flowing into those. For a lot of regular people, this is a great answer. And for regulators, it's been a good answer too, because although they fought the Bitcoin ETF in Canada, and same in the United States with the Ontario Securities Commission equivalent, the SEC, ultimately, now consumers have access to an easy to use product that has a great deal less risk than even getting involved in buying and selling from the regulated sellers. Because with a restricted dealer, yes, they're a trustworthy seller, but once they sell you the Bitcoin, it goes into your wallet and you can lose the keys for that. And some people don't want that responsibility. So now we've got two different prongs here. One, the trustworthy markets in the form of the dealers, the restricted dealer system. And then two, you have the ETFs. So you have the investment fund regulated space as well. And both of these sides provide different things that consumers want. And then your third big story in Canada is one that's really in the background. It's not one that regular people would be particularly aware of unless you're in this business somehow, or unless you were in this a number of years ago where it was even more difficult to keep a bank account in Canada if you had something to do with cryptocurrency. So I told you about the anti-money laundering rules that were brought in starting in 2014. And when this happened, a lot of people said, wow, this is going to be so great because once these rules are in place, now everyone will be trusted and it'll all be good. That's not what happened. The banks basically didn't care. And if you were a company who's now an MSB buying and selling cryptocurrency, although you're registered with the federal government for anti-money laundering, the banks didn't care. And in fact, becoming registered as a money services business, that's a high-risk bank account. Money transmission, currency exchange, these kinds of things are considered high risk by the banks, and it's very difficult if you're a money services business to get a bank account. Although there's a degree of a right to a personal account in Canada, that certainly doesn't apply on the business side. And as someone who writes contracts, I can tell you the contracts that you have to sign with a bank for opening a business bank account are incredibly one-sided. There's basically nothing more they can do to make a bank account agreement more one-sided in favor of banks for businesses. And that's always the way that business banking has been. It's up to the bank to decide whether they want you as a customer, and they can and do close people's accounts. And in Canada, the way they do that is they say something like they send you a letter, your account exceeds our risk tolerance, no more questions. You have 30 days to move your money somewhere else. There's no appeals, there's no finding out more about it. You're just kicked out. And often when a business was kicked out a few years ago, they would also look at who the people were who owned it, and they might close their personal bank accounts as well. So tons of people had their personal bank accounts and credit card accounts closed due to links to the cryptocurrency industry, even where they'd done nothing wrong, there was no accusations that some sort of crime had happened. The banks were extremely not keen on this. And this led to people to seek maybe second tier banking, is the way to put it. So I told you before, there's this big five. There's this banking oligopoly, basically, in Canada, where almost everyone's services are provided by these big banks. It's not going to work so well in the video right now, but in the background behind me is the city of Toronto with the various bank towers and their big logos on it. And these companies provide all of your services. They provide banking, they provide payments, they provide insurance, they provide investment accounts, they provide just about everything you want. Credit cards, you name it, the big banks have you covered. They're vertically integrated and they offer a wider variety of services than what many countries restrict to their banking industry, due to a number of consolidations that have happened in Canada and the government's belief in Canada that having a very small number of very large banks is the safest regulatory structure. But there exists many, many smaller banks in Canada, not nearly as many as the United States by a factor of about 50 to 1, but still a lot of small tier players. And then a number of alternative players who have played a role in this as well. So there's something called credit unions in Canada, which is a type of co-op. And these have long been linked to certain political causes, worker movements, various groups of people. They're often associated with more like socialist inclinations, and they have a long, interesting history. There's also a version of this in Quebec. The French-speaking province in Canada has a different legal tradition that has also become quite big. But these credit unions haven't played that significant role, although some dealers over the years have been able to use credit unions. Ultimately, that route disappeared due to pressure from the big banks, in part because the big banks are involved in clearing payments for the central organization that manages clearing for credit unions. And so you can't really get away from the big banks in Canada, and credit unions haven't really been able to carve out much of an alternative state for themselves within this industry, as well as everyone's just sort of concerned because they're concerned what might the government think? There's a federal banking regulator called OSFI in Canada. And if you talk to the people who run small banks, they're always very concerned with OSFI, but not on the basis of written guidance, but instead from the way Canada often works with things where you just sort of know, oh, that's what the government would like, and you have to kind of guess, and you have to try to reduce risk on your own, and then they'll review what you're doing, but it's not black and white law. It's not written down rules for what to do. And so anything that's somewhat risky, maybe they're not going to get involved at that. And this is a fine line for these small banks to walk. Nonetheless, they have played a role. DC Bank, one of the smaller players in Canada, was once quite prominent in this space, and then they largely backed off from this industry. They still do some work in it, but they enormously increased their fees, probably due to their own higher compliance costs. Because as much as the businesses might complain about being treated unfairly by the banks, the real reason banks don't want to bank these people is that they have a huge number of problems. Because it doesn't sound like they would have major problems with their customers because you have to ID them, but everybody wants to try to defraud these businesses. They're always trying to cheat the dealers because if you can get them to send you Bitcoin, you can immediately remove that Bitcoin and they can never get it back. But the money you sent them can be clawed back because the money was sent through the financial system. For example, there's a popular system of debit transactions in Canada called e-transfers, and most people don't know that those can be reversed. So a number of years ago, when there were a lot of small virtual currency dealers like this, there was a problem with e-transfer fraud where they would send you $100, $500, $1,000, $1,500. The first ones would seem good. The $1,500, you send them the Bitcoin, and then it turns out that e-transfer was actually fraudulent, or maybe they're all fraudulent, and it was actually done with stolen banking credentials. And due to the number of people with hacked bank accounts, things like that, there's a lot of criminals out there who are sitting on these legitimate credentials. Um, and so the companies involved in buying and selling always have this risk where they're accepting money electronically, that money might be clawed back through the banking system. And then what it appears to the bank is that, oh, they seem to have a fraud. And so these many, many problems with reported frauds and criminal transactions, which are not the responsibility of the dealers per se, because they did check the IDs. They seemed real. The payment all seemed real, but it's actually criminals targeting them and ripping them off. And then that appears as a problem for the bank. And then ultimately the bank cancels their bank account. So these problems around fraud and risk, they're not the conspiracy that some people think in Canada where, oh, they're out to get us or they're our competitors. It's not so much that, it's that there are legitimate problems with stopping fraud because the regular banking system relies on clawing back money as its main anti-fraud method, whereas with Bitcoin and Ether, there is no clawing back money. When you send a transaction, it's permanent. It happened. Good luck to you. Your only recourse is to try to pursue them on the money side. But of course, if the money side was actually fraud, there is no getting it back. and the company's out the money, their fraud risk becomes higher, and ultimately they lose their bank account. And you can see how this might scare some of these credit unions as well, who are not very well equipped to deal with this. So that led people to search for other partners that might be willing to do this. One of them that's been quite prominent in the space, People's Trust. They're a type of specialty bank, a trust company, which I'll talk about a little bit more on what the structure is. And then also a very interesting example in Canada has become a significant player in this. There is a government-owned bank owned by one of the provinces. So it's not owned by the federal government. It's owned by a particular province, and their mandate is to do banking for their own people in their province and to build up their province. And one of the areas that they've seen is they've seen this digital asset economy, and they've judged the actual risk of these accounts. And they don't have to be as concerned as these other smaller players because they're actually the government. So the federal government's banking regulator, although they're important, ultimately the government to government relationship is quite different than one of small bank somewhere that's worried about the government, because if they pull their banking license, that's the end of their business. Whereas a provincial government can stand up for themselves a bit more. And ATB has ended up being a fairly significant player in providing banking services. Okay, now I'll take a step back and tell you a little more about the structure of Canada's money industry, because I think that's going to help everyone on this call to understand how this translates over into the Ghanaian experience. So, number one is the presence of big banks that offer every service under the sun and have not been crypto friendly to date. Major challenge. This challenge has been overcome not by regulation, though, and I'm not sure actually any kind of regulation would be needed on the commercial side. As frustrating as it's been for my clients and anybody else trying to start a business, ultimately you really can get a bank account with a big bank if you're a large enough cryptocurrency dealer. Because if you can explain to them how you're mitigating risk, if you can show a good track record, it's possible some of the big crypto dealers in Canada do have bank accounts with big banks. But these big banks exert an extraordinary force on this space, and they are, in some sense, their own version of regulation because of their incredibly large market size. And they can play an outsized role, for example, when some of the companies cut off credit card transactions, where you couldn't use a credit card to buy cryptocurrency, is one way that they can exert a large force because so many of the consumers have bank issued credit cards from the big banks. The second major area is the money services businesses that I've been talking about. This is the entrepreneurial side of Canada's money industry, very family business, very low level of regulation, but not no regulation in this. This is essentially regulated by FINTRAC as the agency in Canada. FinCEN, if you've heard of them in America, is the example in the United States. And there's similar regulators in other countries. And they're all a part of FATF. And most of the rules in Canada for money services businesses are actually from FATF, the international organization, which explains the degree of standardization of these anti-money laundering rules across different countries. Although the particular implementation in Canada is, of course, unique, because that's how it works on the MSB side. So the dollar thresholds and the rules and all these kinds of things are quite unique to Canada. Although if you look at the rules, you might not actually understand what the rules really are. The real rules are found basically in the compliance manuals that companies follow, and these manuals have a relatively consistent format. So there's a bit more to the rules than it might seem, because the rules are very principle oriented in the anti-money laundering space. And they also give wide discretion to the companies to come up with their own system of how they're going to stop financial crime, which is very often in the interests of the MSBs as well. So in my own work in the anti-money laundering space, it overlaps very significantly in the anti-fraud, because most of this is actually attempts to steal from the business or steal from their customers. So stopping criminals isn't just good for achieving these national objectives around anti-money laundering and counter-terrorist financing. They're also really useful for stopping people from cheating you. So they're of practical significance to the businesses. And then the third part of Canada's money industry is the specialty finance institutions. So this would be ATB, the provincially owned bank. This would be the special trust companies, for instance, trust I mentioned. But there's also various other kinds of specialty finance in Canada. For example, there's a very large trust company that was acquired for $2 billion something dollars a few years ago, and they entirely specialize in providing services to doctors. They're a trust company that just serves doctors. So there's a few of these special sorts of financial institutions, and they have a role in the Canadian space. Um, and then credit unions as well. They were for a while a bit of a solution, and then credit unions sort of dropped off the map, and the credit unions in doing these kinds of services. And then there's another part that I've talked about as well, whether or not you count them in the banking industry. I don't know what the overlap is in Ghana, but there's also this very large industry of investment dealing. That's a prominent industry in Toronto, of course, but for the whole country, that's relevant. So this would be things like the cryptocurrency. And then the regulators who oversee that and the investment industry have also ended up overseeing the dealer industry. So you've ended up with this sort of hybrid regulation where today the securities dealers have ended, or the securities regulators have ended up being one of the regulators of this space, overseeing of the what are known as the restricted dealers today, and investment. Okay, so that's a lot. I've kind of fired through a few of these stories here, and we can talk through a lot more history of the Canadian cryptocurrency space. We can talk a bit more about the rules themselves. I haven't talked too much about the technical details of these, but I think now would probably be a good time to open this up for a discussion where we can focus a little more on how this Canadian experience translates over onto the Ghanaian side, what can be learned, what wasn't done well in Canada, what parts of this might be useful to adopt for businesses that are looking at lobbying for these rules or the government looking at implementing these rules. I'm happy to take this conversation wherever you'd like. But before we go over to the discussion, I just want to thank everyone for attending today and listening to me over the last hour about what's going on in Canada, the history of this space, and hearing my concise timeline of the regulation of the Canadian cryptocurrency industry. So thank you very much for joining me, everyone.
Hi, thanks very much for the insightful presentation. So we are at this stage going to take questions. So I can start with some of the questions that we received ahead of this session. So somebody wanted to know about cryptocurrency and the future of central bank digital currency. Are they going to be run in parallel or one will overtake the other?
Great question. Well, I don't know what the prophecy is on what will happen there, but I don't think that central bank digital currencies will eliminate cryptocurrencies. I don't even think they'll eliminate stablecoins. So there is a central bank digital currency effort in Canada. It hasn't really gone anywhere. The government likes to talk about this. I don't think these have been very successful. For example, your neighbor to the east with their own central bank digital currency effort, my understanding is it's been a disaster. And I am happy to hear anybody disagree with me on that. But I think people from abroad have paid attention to that example. I've seen Nigeria come up as an example of, well, maybe central bank digital currencies, maybe it's too soon, or maybe this isn't such a great idea. I think in Canada, they have almost no purpose. It's very hard to know. What do consumers get out of it? It's extremely unclear what the benefit would be to consumers. It's very obvious what the benefit would be to regulators who view things through their own lens, but I don't think that's a good lens to look at. If the government wants to do something purely for their own purpose and with no benefit or costs for the public, these kinds of efforts, you can try to push them forward and try to say, oh, that's advanced. We're doing the next thing. Is that the next thing? I don't really think so. It's very hard to see what the practical value of that is. And if you look at a lot of what the government says about central bank digital currencies, they very often do position this as oh, look how good cryptocurrencies have been. We'll make our own. And then they say, oh, but it won't be like cryptocurrencies. Well, what do you want it to be? Is it supposed to be like cryptocurrencies, or it's supposed to be the opposite of them? And then they want to have it both ways, but you can't. There are serious trade-offs and differences in how these things work. And I think the reality is that the world is more and more connected. Borders more and more are not very meaningful to regular people. They're extremely meaningful to regulators and to people who have to worry about laws. But in terms of consumer behavior, people just expect things to work. They expect the internet to work. They expect technology to work. And with cryptocurrencies and stablecoins, they do. Everyone on this call can open a wallet and you can receive QCAD tokens or you can receive USDC tokens and you can send them to someone else and no one will stop you. And there's no registration and there's no government approval. And it doesn't matter whether you're in Ghana, Nigeria, Canada, or somewhere else. And that's incredibly powerful. And I think for sure that's the future of interconnection, global markets, people dealing with one another directly, rather than these new national C2B systems where I don't think they're thinking enough about what are the benefits to the consumers. I think that's got to be the focus. And until that becomes more clear, I think the stable coins are the future of this.
Okay, thanks very much. Alex, can you mute? So please, if you have a question, just use the raise hand button and we can call you. So Paul Sai is asking a question, how can government control sponsorship to terrorism if transaction is secret and central banks have no control? So I think he's talking about the issue about illicit finance related to terrorism and how crypto plays a role in it.
Okay, well, I'll give you a slightly controversial answer on this. And I'll preface this by saying I've done talks for all level of law enforcement in Canada, for hundreds and hundreds of police officers. I've been involved in criminal investigations. I've been involved in responding to production orders. I've seen a lot of different sides of this. I've been a legal expert for one of the major cryptocurrency theft cases in Canada. And it is absolutely true that these systems can be used to send money or value in complete secrecy with no ability to track it. And that is really frustrating. And that is a problem for people who are the victims of crime. And it's also a problem for parts of the government that are looking to stop terrorism. And I also think it's quite amazing. It's amazing technology that can make this possible. And it's not going to go away. And I think that's really important as a part of any kind of answer here, that it should be acknowledged that things have changed. Technology has changed, and there's no closing Pandora's box once it exists. So what do you do? Well, one important thing here is to take a step back and look at counter-terrorist financing legislation, which primarily in Canada is the PCML-TFA. Has it worked? One, terrorists essentially don't exist in Canada. There's basically none. The small number of people who've been arrested, they almost always have something to do with other countries, or they were complete idiots who never could have carried out any real terrorist offense. And most importantly, they were all caught not through the financial system. I think that's a false goal. It's never actually going to work, that you can study everyone's financial transactions and figure out who the terrorists are. And there's very little evidence for this idea even. It's like something I think that appeals to people from watching movies or like Batman or something where you like could imagine that's possible. But in reality, it's not possible because these people don't have distinguishing finger marks that particularly separates them from other kinds of people or even criminals. And even the history of using the financial system against criminal transactions, it has not been particularly effective in Canada. The mafia still exists in Canada. Still, almost all criminals, they're caught through old-fashioned policing. And I'd actually like to see more of that, and I've been an advocate for that in Canada, that there needs to be more serious financial police that are capable of understanding this technology and capable of working with private lawyers, private businesses, all of whom want to eliminate the criminals. I don't have a single client who likes criminals. They hate them. They're huge cost of problems for them. And sometimes they cost them millions of dollars in these people's crimes. Every business is aligned against criminals in Canada. All of them would like to remove these people as much as possible. And they find it really frustrating to deal with the government. They do not get the support they need. The police in Canada are essentially unable to deal with these kinds of crimes because of a whole bunch of reasons that we don't really have time to talk about today. But they're probably pretty similar reasons actually to Ghana. One, an old-fashioned policing model that's based on police out on the streets, fighting some guy or something like that. Two, lack of technical experts. The police do not have access to the kinds of specialty professionals that are required for doing this. They need to beef that up. And I think that's what governments should focus on around, to your question, Mponsa, of how do they control sponsorship to terrorism? You probably can. Like, it's probably much better to go after the terrorists through regular counter-terrorist methods and regular policing methods. They seem far more effective, and there's no way to change this technology. If that's what you're left with, I think you've got to focus more on the policing side rather than kind of magical technological methods, which always sound great. But then what's the reality of this? How do you really go after criminals or terrorists? I think it's through policing rather than through financial surveillance, which is not possible for skilled criminals. I worked on the largest theft case, as I said, in Canada. There is no way to track where that money went. Once it goes into Tornado Cash and it's sent out, it's perfectly gone. And if somebody figures out a way of tracing those Tornado Cash transactions, which is like somewhat theoretically possible to a degree, there will be a next thing that really is perfect. These things already exist, like Zcash and in other technologies, and they are being adopted into cryptocurrencies, and it is 100% the future. Untraceable transactions exist now. They're a technological feature that can't be removed by law because anyone can access this technology on the entire planet right now. And you can't look at a system that involves stopping that. It's impossible. It's like asking water to flow uphill. You cannot remove these technologies that are available to the world.
Okay, thanks very much. There's a hand up. I think it's Sound Sprouts, if I got that right. So can you unmute and ask the question, please?
Thank you for this awesome session. So the question for me,
We've lost you there. Do you want to try
I
again?
mean, I was asking about the centralized exchanges and their role, like, OKX, the sort of OKXs and the Binances, and their role as far as the adoption of the cryptocurrency. I think
So that's a bad line. So would you mind typing your question if you can? Okay, there is one in the chat now as we wait for him. What's happened to the countries that have accepted crypto as a mode of transactions? Are they experiencing sources, failures, or contemplating their decision? Is there any example of such countries?
Kenneth, do you mean the places that have permitted this for paying tax bills? Like that? Like the government receiving the transaction?
At overall adoption? Yes.
Yeah, there are a few examples of those. They generally have used payment processors. So actually how it works is dollars are deposited into their account. So I wouldn't really say that's accepting cryptocurrency. If you look at a lot of these announcements, they're actually more using a payment intermediary to do it rather than literally accepting Bitcoin or Ether, which makes sense given the way they work. There's been a bunch of municipalities in Canada that have done this, some US states for tax bills. I don't think it's been that important of a development of actually accepting crypto like that. And probably it's not that useful development in general to accept because people are going to have bank accounts already for paying their taxes. It's already kind of a part of that. I'm not sure that it would be that compelling to be able to pay them through some other means like that. Maybe in an alternative future where more and more people use stablecoins, I could see that happening. Okay. I'm just going to take a 1-minute break and then we can resume with the questions.
Okay, whilst our speaker is taking his break, if you have any questions or comments, please, you are free to do so. I wanted to ask around, is there anybody on this call who is into crypto and their experiences so far, if somebody wants to share that? Yeah, go ahead. Any comments? We would love to hear from you.
Should I just go with this?
So can you go ahead?
Okay, and we're back.
Okay. So in Ghana, we have two regulators, the central bank and the Exchange Commission. So the question is that from the Canadian experience, if there are multiple regulators regulating the financial system, how do they coordinate to ensure that there is no gap in regulation or to make the market viable or vibrant?
That's a good question. Ideally, I think you'd want to not follow the Canadian experience here because there's actually overlapping regulators depending on what your business is. So ShakePay that I mentioned earlier, one of the major cryptocurrency dealers, they're a client of mine, and they're regulated both by FINTRAC on the anti-money laundering side and by their provincial securities regulator. So their primary regulator is called the AMF, the Autorité Marché Financier, that's the Quebec regulator of this, that's the equivalent of the Ontario Securities Commission. But they also have to worry about all the provincial securities regulators. So there's no national regulator like in Ghana. Instead, it's at state level in Ontario, Quebec, British Columbia, Alberta, all these different provinces in Canada. They're actually the securities regulators. There's no national or federal one in Canada. So there's a federal anti-money laundering regulator that's consistent, and then also some provincial overlap. Quebec has their own version of that, but not provincial. And then on the securities regulation, that's per province. So some companies have several different regulators that they have to be thinking about. The regulation in Canada has not been at the level of the bank regulator. They've actually done almost nothing. OSFI is the name of that, although there's provincial regulators that oversee the provincial financial institution as well. And they've been quite silent over the last many years. They seem just pretty fine with this situation where banks choose their customers. Seems fine, I guess, from their perspective. And then you have not seen much coordination between these other organizations. I don't see any evidence really that the anti-money laundering rules federally are particularly coordinated with the provincial securities regulators. And actually, they have their own rules that overlap somewhat on the anti-money laundering side as well. So because of Canada's federal system, in which some things are federal, some things are provincial, and some things are both, you end up with intertwined rules, and there could definitely be better coordination. Sometimes these levels of government are actually antagonists. They do not work together because they might oppose each other politically, depending on who's in charge of either the province or the federal government sometimes too.
Okay, so the follow-up question is that are centralized exchange helping with control or maybe regulations?
Probably not that important in Canada. I think some of them have been quite helpful to securities regulators, but they've largely pursued their own agenda about this, quite focused on the Quadriga CX story and avoiding that happening again. So give and take, I would say in that. But it's certainly helping them with control in the sense that having a small number of large dealers is what the government would like. That's the simplest regulatory system, of course, to just have a few different companies that you oversee and make the rules for. It's easier for them to deal with. And the way this is mediated today is almost entirely through lawyers. So all of these restricted dealers have tons of lawyers, the government has lawyers, and they're the ones who are coordinating between things. So that coordination is maybe not as coordinated as you might like, because it has to be mediated through lawyers and a fairly oppositional process.
Okay, thanks very much for that. There is a general question. How can an individual own a crypto account and crypto investment?
Through regulated players in Canada. One, you can open an account with someone like ShakePay. It's only open to Canadians. You just open an account, you provide your ID, and then you have access to that. And then in terms of crypto investment, you would have open a regular securities brokerage account and you would just buy a Bitcoin ETF. There's a number of them. So those are two different regulated paths. And then there's also the purely anti-money laundering regulated path, which is that there's a ton of these small dealers in Canada, but they don't hold accounts for you. So they would send the cryptocurrency to your wallet, which you would have in your own program that you download off the internet. And that would be something like Exodus or one of the other crypto wallet providers. You're on mute.
After your mute, yes. So no, I was talking about harmonization of regulations. EU have some examples. I think North America, between Canada, US, Mexico, any movement along that line? And is there any suggestion for maybe the West Africa region, ECOWAS, or African Union for the continent as large?
My personal opinion, I think that's an amazing idea. And I think it just obviously makes sense that ECOWAS would want to set standard rules because that would enable the companies to have portability. And if the companies can compete in the whole region, ultimately that's what's going to give Ghanaians the best service. Because with this business, what you want is fairly large, trustworthy companies that can afford to hire all the lawyers and accountants and things like that. And this is easiest when you have a larger market. So in Canada, this is a national market essentially. In America, much less so. It's much more on a state-by-state basis because of different money transmission rules in the United States. I mean, I don't know if that's really held back the development of major dealers like Coinbase. Probably not.
Yes.
But I think that's the way that ideally you'd want that. And also, I think the rules would be better. I think it would just make much more sense if there can be that coordination and create those rules, because are the rules really that hard? You can look at a number of different countries and see how they've done things. But the areas to think about of banking, payments, securities, they don't really require a lot of modification. If you want to regulate this space, the existing rules are already pretty similar. And in Canada, that's exactly how things have gone. The existing rules were just expanded a bit to clearly cover these activities. But the principles, the systems, everything about it, none of them changed. So the statutory amendments in Canada have been actually quite limited, whereas a lot of it's been done by guidance and by regulators simply expanding their jurisdiction that was already within their statutory authority. I don't think the harmonization with the US is that good, actually. I think it's pretty different. There is harmonization with FATF, though, with the anti-money laundering rules. But if you look around at this new level of regulated cryptocurrency dealers, you'll see they're actually primarily national champions. They're generally not international. Most of the international ones have serious legal problems, like Binance and their multi-billion-dollar settlement in the United States. I can tell you their behavior was not unique to the United States. And their competitors like that operate similarly They all have similar problems. I think those are yesterday's story. Those kinds of companies, they'll drop away in favor of these national ones for an important reason: access to the banking system. That's the key thing. You need to convert CDs over into Bitcoin and back. That's what you need. That's the key part. And someone like Binance, they can't help you with that because they don't have access to the Canadian banking system, or at least I assume they don't. And so if you want to have a really successful company that can be used by millions of people in Ghana, it has to have good connections to the banking system. It has to be easy for people to send their money from regular bank accounts to buy Bitcoin or Ether. How exactly they receive it, how it's stored, all of this sort of stuff, this is subject to whatever regulatory scheme. But that banking connection is key, and it's why you're seeing around the world the Binances and these players disappear in favor of companies that are actually companies that really are at the borders of whatever payment system exists. That's the real key, I think, to this story.
Question that I have from this end will be about the use of technology, especially AI in regulations. Some of countries or some areas in terms of regulation don't have the capacity. So does technology help in terms of ensuring that they can stay abreast? They have the tools needed to ensure they do a better job at regulation.
I mean, one I'd ask, does AI really change anything for a regulator? Because one of the goals of modern rules is to try to make them be technologically neutral, so that no matter what the companies are up to or how they're doing things, your laws still make sense. AI tools have been adopted in anti-money laundering and anti-fraud years ago, and they're only getting better. But there's no regulatory change required. Maybe in Canada, they might require in the next few years that you use AI-powered anti-fraud, anti-money laundering, counter-terrorist financing applications. But I don't think they really need to legislate this because companies are already providing this. It's already heavily based on vendors that sell in this technology for doing KYC checks. And the AI versions of these, they're already for sale, they're being used. Not a lot of controversy there. There is a new federal law in Canada around AI, which might change things around algorithms. I think in a negative way. I don't think rules are really required around this in the AML space. In terms of empowering the regulators, one thing I would hope they would think about is, can they design rules that make it easier for AI to understand the rules? Because then businesses can use AI to help avoid the need to spend a lot of money on lawyers. But this requires making clear rules that can actually be understood by computer systems, which is not how normal laws are being made. And even with huge advances in LLMs, I think you still need to do some of the work at the regulator level. That would be very neat. I don't know of any country that's thinking in terms of that, of how can you make AI be a tool for compliance so that people can know what the law is and obey it? Because that's often a big gap. It's easy to make a rule. It's something else to make a rule that's easy for a business to follow and that will actually help people. And I think there's more of a role to be played there for AI, but that hasn't been a focus of regulators, and certainly not in Canada.
Note, I want to go around for the last round of questions, comment, if any. If not, then I will want to take your final words, then we can close. Okay.
Anyone else?
The final words, the last bit of
My final words are,
yes, from
are
your
that I've talked about some negative things in this talk, of course,
Yeah.
because I'm a lawyer about regulation and rules. But the positive side, what's really great about this stuff is this is Ghana's connection to the digital economy, which is emerging. Already, people have so many problems. People in Ghana, Nigeria, these countries, they're just blacklisted right off the bat from every service, like Amazon and these kinds of things. So many credit cards, they just won't work. You know, people won't ship to these countries due to high fraud rates and problems that have happened in the past, right? But it will take years and years for people in Ghana to overcome all of these bans from all of these international services, right? So then the solution is either you make all your own local services, which is never going to work, No place works like that. Like in Canada, almost everything is from America or now China or the European Union, right? Like Canadians don't actually design most of the software or businesses that Canadians use. Like everyone gets Amazon delivered to their door here in Toronto, and Amazon's not a Canadian company. You can't actually make all these things locally when your country's the size of Canada and Ghana. It's not going to happen. So I don't think the idea of relying on local businesses to fill all these needs will also work. Here's an idea. Why don't you just put all that stuff behind and say, what's the next thing? Just like with cell phones. I remember when I was in the Volta region in like the rainforest with monkeys and stuff in the middle of nowhere. My cell phone worked better than it did at home anywhere. I had way better phone service in Ghana than I ever did in Canada. It was cheaper, worked better, worked out in the forest and rural areas. Good luck to you here. I remember when I was a kid with my dad out, he'd always be walking away from their cottage. He'd be like on the bridge, and there'd be other people on the bridge as well, standing there like trying to get their phone service. That's what people were doing in Canada at the time. Well, everyone in Ghana had great cell service. Like you can just say, okay, you know what? Enough with that. We're going to go into the next phase here. And the next phase is access to this new digital economy where you say, you know what? The credit card companies aren't helping people here. All of these international services, they don't have that financial inclusion with people in West Africa. Okay, fine. We'll skip that. We'll go to stable coins. We'll go to DeFi. We'll go to start dealing with the rest of the world like this. Can't get your payments through because wire transfers from your bank to, I don't know, France or something aren't working because someone put Ghana on a list for high risk for money laundering or something due to the activities of criminals that have nothing to do with you. And here you are just trying to buy something. Okay, sidestep that system. Instead, use cryptocurrency where there aren't such rules. And that might not sound great to regulators, but that's the flip side. The things that don't sound great to the regulators in Ghana are also things that regulators elsewhere might think are good around more of these kinds of controls and blocking countries all over the world, because that is the naive solution that people use. When they see crime problems in other places, they just block those countries entirely because they don't care. There's not very many customers in these places, and they say it's not worth the trouble. Just like my story about banks cutting off crypto dealers in Canada, it's not worth the trouble. We don't care that it's not your fault. We don't care that this is the result of criminals. It's become our problem. We don't want it to be a problem. We don't have to. You're off the list. We're blacklisting you guys. This whole thing is off. And that's what happened for years, and it's still a problem for people in Canada. What I'm telling you, though, hasn't come true in Canada because the reality is people want to move Canadian dollars into Bitcoin and back. So you need to have those interchange services. But I think the more regulators can focus on this as an opportunity, as a way to integrate with the global economy and sidestep some of these problems of the past, I think there's the opportunity and the thing that could turn Ghana into an international champion in this space.
Okay, so that's a very brilliant note to end the session. So can I invite everybody to turn on your cameras and let's give a big clap to our speaker for
Thank
this
you very much,
incredible
everyone.
presentation. Yes, please do. Yes, please do. All cameras on, and let's do a big thank you. I can see you. So let's do a big clap. I can see some more. Okay, so can we all clap? Unmute your mic and let's give a big clap.
Thank you very much,
Can you hear
everyone.
that?
It's a great talk.
So thanks very much for your time. We really appreciate it. And we're hoping that this will just be the beginning of this seed that you have sown and one day to grow so that we can ensure that this whole innovation in the area of fintech, Ghana can also participate. Thanks. Have a good day.
Absolutely. Best of luck to all of you.
Okay, cheers. Bye.
Good day.
Bye.